Okay, we're going to go ahead and kick it off here. Thanks for joining, everybody. Sorry for the technical difficulties there in the beginning. This is Mike Toy with National Brokerage. Today we're going to do a webcast on life insurance with LTC. And that means LTC riders and LTC hybrids. I'm joined today with, from Nationwide, we're joined with Jordan Chase. Jordan, I'm hoping I was able to unmute your line there. If you want to go ahead and say hi if you're able to. Let me know if I unmute.
Yeah, hey,
correctly.
Can you hear me?
Great, thank you, yes.
Perfect.
All right, thanks, Jordan. Yeah, so anyways, I'm going to go ahead and kick it off now that we got our technical difficulties figured out, and I'll just click through the slides. Jordan, if you want to, when I kick it over to you, just tell me when to click, and I'll click to the next slide. All right. So in the meantime, just real quick, once again, Mike Toy, National Brokerage. We're a life and annuities broker based here in Boise, Idaho. We work with agents and agencies of all sizes for all of your life and annuities needs. And today, I'm going to kick to the next slide here. We've got two main goals with the webcast today. The first goal is to just clear up some confusion around life insurance and LTC. Because while it might sound kind of simple, there is some confusion around it as far as the difference between an LTC rider versus traditional LTC versus a chronic illness rider and LTC hybrid. So just want to go over this real quick scale and an easy way to think of it if it's a newer concept to you or if there's a little confusion around it. So on one end of the spectrum, you've got life insurance, all the way here on the left. On the complete opposite end of the spectrum, you've got traditional LTC. Neither of those two things have any element of the other in it on those stages. Now, in between, if we're going to start on the left here, start at life insurance, the next step over would be a life insurance policy with an LTC rider. There's a lot of carriers out there that have this, and essentially all it is a rider which allows the insured to use some of that death benefit while they're still alive if they needed long-term care. Typically, they would choose between 2 and 4%, and that means 2 to 4% of the death benefit each month. So to use easy math, if it's a $100,000 policy, and they chose a 2% rider, and then they become, if they go on claim and need to use the LTC benefit, 2% of that $100,000 would be $2,000, and they would get that every month. The next step over from that, getting closer to the traditional LTC, would be an LTC and life insurance hybrid. And that's what Jordan's going to talk about here in a moment. He's going to go into one of their products, Care Matters 2, which is a favorite of ours. Most of our agents tend to gravitate toward that because of the different ways that the benefits work and it's ease of understanding. It's one of the less complicated ones out there. So here in a second, Jordan, I'm going to kick it right over to you. And then the next step over is traditional LTC, which is just long-term care benefit, no life insurance or death benefit involved at all. So this is just a quick way to kind of separate the differences in your mind between life insurance with an LTC rider, a hybrid, and traditional LTC. So with that, I'm going to go ahead and kick it over to you, Jordan.
Perfect. Thank you, Mike. And thank you, everybody, for joining the call today. As Mike mentioned, my name is Jordan Chase. I am an internal wholesaler here at Nationwide, and I work with Mike and his team in providing our products and making them available to advisors such as yourself. So I appreciate the time. And what I really wanted to dive into today was, as the title here shows, informal caregiving and home health care. This ties into not only our Care Matters product, as Mike mentioned, which is our hybrid product, but it also is our rider. It's basically kind of our brand Nationwide in offering that informal caregiving and home health care, which we'll soon find out in turn can offer your clients more benefits because of the lower costs that come with informal caregiving. So if we want to go ahead and go ahead 2 slides there, Mike, to the informal care slide. Perfect. So informal care, facts that may surprise you. So there's many surprising facts about informal caregiving and home health care. So I'm going to share a few facts about how Nationwide can help with these and how Nationwide can help with these facts. If you go to the next slide. When speaking about how people are cared for when they have long-term care needs, many associate this with formal care that people receive at home or in a facility by licensed caregivers. The cost of formal care is $241.7 billion per year. So what many people don't realize is that the need for informal health care is on the rise. Anyone want to take a guess on how much the total cost of informal caregiving in the United States is each year? And if we go to the next slide, we'll have that number for you guys. So $522 billion, over twice as much per year spent on informal caregiving. Essentially, 2/3 of the care in this country is going unaddressed. That informal caregiving, and which we'll soon learn, is typically going to be family members or friends taking care of individuals because they can't afford the formal health care and having people come into their homes to take care of them. If we go to the next slide, please. So the informal care costs are greater than annual sales for Walmart. You know, it's a pretty big number. We're talking huge numbers here. In the next slide, we'll talk about kind of formal versus informal, which is the financial impact of informal caregiving is double what is spent on formal health care and facility care per year combined, which we just kind of went over there. So the next slide here, you know, informal caregivers at home. If we just look at kind of these statistics here, 66% of older disabled people who receive care at home receive care exclusively from family, mostly wives or daughters. 26% receive some combination, and 9% receive only paid help. So 66, that first stat, 66% of people receive care with no formal care help. Only products that offer long-term care benefits that can be used to pay informal caregivers will address the needs of these clients, which is 2/3. So it is important to take a look at that informal caregiving. And if we go to the next slide, ask the question, what is an informal caregiver? And defining an informal caregiver, you know, an unpaid individual, for example, a spouse, partner, family member, like we mentioned in the previous slide, a lot of times it's daughters or wives, involved in assisting others with activities of daily living and or medical tasks. And 25% of those caregivers are millennials. So taking off work is even more stressful for them since they are less established in their careers. Help with ADLs and IADLs. A lot of people know, you know, the ADLs, acts of daily living. You have to meet 2 out of the 6 usually in most cases. When making initial plans for long-term care, though, the IADLs often go unaddressed, and people often aren't concerned with those. So many formal caregivers will not do these things or will require expensive healthcare type rates to do so. So it could be up to $50 an hour to go shopping, things like that. So these are these IADLs, you know, the household chores, meal prep, money management. These things go unaddressed unless you have a sort of plan that offers informal caregiving. Go to the next slide. And it really comes down to these 3 main issues when facing informal caregivers. The next few slides will actually quantify the deficit on an informal caregiver in these 3 categories of their lives. Those 3 are income, time, and health. So if we take a look at loss of income for these informal caregivers, the average caregiver ends up losing an average of $303,880 in income and benefits while taking care of loved ones. You know, that also includes a loss of a potential promotion, throws careers off track, when you have to spend a lot of the money towards, you know, helping these family members with their long-term care needs. Loss of time / salary means less Social Security benefits. And the average out-of-pocket cost for a caregiver is $7,000 per year for various expenses. Long distance is closer to $12,000 a year if an informal caregiver has to travel a long distance. The next one's loss of time. So 30 billion hours per year are spent on informal caregiving, with 22 billion hours performed by people with full-time jobs. That means, you know, individually, an average caregiver gives about 24 hours per week for 4 years. That's on average. So there's people that, you know, give even more time to take care of those loved ones. Not only lost time at work, but also you lose free time. So it's a combination of those 2 things. And then the final one is loss of health. And caregivers have been shown to have much higher rates of health issues, such as depression, than non-caregivers. The strain on time and money with the added emotional stress of caring for a loved one clearly takes a toll, as you see with these statistics here. The effects of being a sole caregiver can be life-threatening. You may be shocked to know that 40% of sole caregivers predecease the person whom they are caring for. And those are typically usually a spouse, but still that's shocking to know. You know, almost half of people predecease the person they're taking care of. So what does that all lead to? Planning for informal care. So the choice to receive informal care from a family or a friend deserves the most amount of planning, but usually receives the least amount of discussion. While informal care should be a choice, it may end up being a necessity for many people. Can anyone think of why informal caregiving isn't widely discussed in the industry? We go to the next slide. Simply, Price is what you pay, value is what you get, as Warren Buffett states. It's time that we focus on value for the client and not the price. And that's where we come into play. Nationwide offers value with a suite of cash indemnity solutions, including the rider that was mentioned before, but more importantly, our Care Matters 2 product that offers this informal caregiving cash indemnity benefits. So our diverse suite of long-term care solutions provide your clients with benefits that can help pay for the type of care they need and want. So we're here to discuss informal caregiving and its impact on your client's long-term care planning, and we offer those solutions for your clients. So imagine a solution that allows your clients to receive the long-term care they need from the people they trust in the place they want to be. At Nationwide, our goal is to provide long-term care solutions that may fit your client's financial needs, as well as help them remain in their own homes and communities as long as possible. And that's what it really comes down to, is we want clients to be able to receive that informal caregiving if they choose to, receive it where they want to, whether it's at home or it's living with a family member, and to be able to offer financial assistance to those family members if they are receiving that informal care. Our Care Matters product allows for that, as well as any of our long-term care solutions here at Nationwide.
Can I add something to that, Jordan?
Absolutely, absolutely.
Okay. One thing that I would harp on too, and I think this is one reason why a lot of the agents that write this kind of protection with us gravitate toward Nationwide, is because of the indemnity factor. And that's something I probably should have gone over on that first slide when we talked about the scale, but something that makes Nationwide unique is the fact that it's not a reimbursement like a lot of these carriers have. And I mean, if you can think of yourself or someone you know out there who maybe needed some long-term care, imagine if you had to, A, go with a licensed care facility, and then B, count on reimbursement for that every month, as opposed to having the option to choose whoever you want. You could have your mom or your daughter or your neighbor or whomever, and Nationwide just sends the check to you for whatever amount that you chose initially. It's not a reimbursement. You don't need to keep receipts and all that stuff. So that's a huge selling point that matters. I would think that has probably one of the biggest impacts next to price and coverage of all the considerations that take place. So just wanted to emphasize that fact a little bit, because that's something that people tend to look over quickly and not let it sink in. So wanted to.
Yeah, no, I appreciate that, Mike, and that's absolutely true. And that has it's come down to that decision for clients a lot of times, where they'll see a monthly benefit that's higher with other carriers, but because it's reimbursement, they don't want to have to deal with proving that they can meet that full benefit number. Maybe Nationwide is $1,000 less a month of benefit, but you're getting that full benefit, whereas maybe the early stages of a claim process, when you are first initially receiving the long-term care benefits, maybe you can't prove you require the full amount. In those scenarios, maybe you're not meeting that full benefit, and therefore you'll have to be on claim even longer to really receive the entire benefit of the policy, whereas with our product, you know exactly what you're going to get, when you're going to get it, and what year you're going to get it. Our contracts are built completely guaranteed with the client in mind, on what Mike was kind of stressing about. And that's kind of what our whole motto is at Nationwide, is it's all about what the client wants. So wherever they want to receive that care, from whoever they want to receive that care, for as long as they want to receive that care, that's our main concern here at Nationwide. So I do appreciate your time here. Go ahead, Mike.
Oh, no, I was just going to say good stuff. And yeah, go ahead and finish what you were going to say there.
Yeah, no, I was going to say I do appreciate the time. I just kind of wanted to stress on, a lot of people leave the informal caregiving, don't really think about that side of it and how it can affect family members. But, you know, a lot of people talk, their main concern, and when the long-term care discussion comes up, is something personal happens in their lives. That's how a lot of these conversations start coming up, and clients start going to their advisors. You know, hey, I had a bad experience. You know, my grandma got sick, and we didn't have any type of insurance. I don't want that to happen to my parents, or maybe I'm starting to get a little bit older, and I don't want to have happen to me what I saw happen to maybe my relatives. And it's usually these conversations start with the family in mind. So we wanted to kind of design this product with the family in mind. And I keep kind of going back to that, but that really is our message, is we want it to be as easy as possible for people when they're in these really, really unfortunate situations. And that's our ultimate goal here at Nationwide.
I could add to that a little bit too, and just say that going back to some of those numbers that we looked at in the beginning, some of those huge statistics, sometimes we get lost. I'm guilty of it too. We look at a big number like 50 billion people, need care, and we get lost in that. But I would say that the point to it is that even though you may not think there are many people out there that you can talk to about this kind of thing, or you can think of one or two, and maybe you mentioned it and they said they were okay, chances are most people are open to talking about it if they know some of just the bullet points that you point out. So that's what I get out of those big numbers, is that, I can't save the world, but it means that chances are whoever's in my world, someone in there is affected. They say that 1,000 people who need care is or what was it? One person who needs care is a tragedy. 1,000 people is a statistic. So, as dark as that sounds, it kind of emphasizes we can get lost in that big number sometimes. But chances are, if you don't think you know anybody who this would work for, chances are you probably do. So,
absolutely.
It looks like we do have a question here. Let me open up the questions. Which nationwide products have this option?
Yes, so just to kind of answer that, our Care Matters product is the linked benefit that Mike was referring to in the earlier slides. So, the life insurance, and you have the life insurance with LTC rider, and then the long-term care / life hybrid. That's where our Care Matters product fits in, is with that hybrid section. But our long-term care rider at Nationwide, if you attach to any of our permanent products, our rider and Care Matters are designed the exact same way. So everything's cash indemnity. Everything's allows for informal care across the board with our rider and our Care Matters product.
And it looks like one other question: is it possible to run the quote ourselves? I can touch on that a little bit, and then you can maybe go into more depth, Jordan.
Sure.
You can run some of the quotes, but getting into the specifics of an LTC rider, you would either need access to the full illustration software on Nationwide's website or to WinFlex. So if you have one of those two things, you can. And then, Jordan, if you have anything you want to add to that.
Yeah, no, I was just going to say that. WinFlex is always an option for people. And then also, if you are appointed with Nationwide, you can create an account on our nationwidefinancial.com website. And there's a link that if anybody needs help getting to that link, I can show you how to get there. But there's a link to download the software, or you can just open up the software in a web page and just run it, through Internet Explorer or Chrome or whatever you use that way as well.
Great. One other question: how are the benefits paid?
Sure, they're paid cash. They're paid to the policy owner. Whatever amount is listed on the contract, that's exactly what's going to be paid to the policy owner once they qualify and go through the elimination period, pretty standard 90-day elimination period. And a couple of other things I can touch on right now while we're talking about how it's paid and things like that. There's a couple cool benefits with our Care Matters 2 product. And Mike, I don't know if maybe there's another time to go do a deep dive for people who are interested in learning a little bit more about that product specifically. But we have a retroactive elimination period benefit, and all that means is there's a 90-day elimination period that's pretty standard with these products, where you have to go 90 days and then you start receiving the benefits. Ours, after the 90-day elimination period, we actually pay you 4 months of benefit that first month to make up for those 90 days. So it's going to be, if you have a $5,000 a month benefit, the first month you start receiving benefits, you'll get a check for $20,000. And then every month after that, you'll get that $5,000 amount that's listed. So that's kind of a new feature that on our Care Matters 2 product that we're really excited about, and a lot of people are excited about as well.
Great. A couple other questions. We've got somebody verifying the website, nationwidefinancial.com, correct?
That is correct.
Correct. Okay. And then another question: what is the underwriting process like?
Yeah, that's great. I was going to hit on that at the end. So great question. It is a simplified underwriting. So the only thing that occurs, there's no labs, no blood drawn. It will just be about a 30 to 45-minute phone interview that the client will conduct with a physician or a registered nurse, somebody who's licensed to take those questions over the phone. The results are then sent to our underwriting team, who then analyze the responses. And then the only other thing is a prescription check to see what sort of prescriptions the clients are on. And then it's either an approval or decline. There's no ratings. It's either you've been approved or unfortunately you are not able to get this product. But very simplified underwriting, and it's pretty streamlined. I've seen cases that have been submitted. They do the interview the same day. It's approved 3 days later. So very quick, very, very fast turnaround time, just depending on when that interview takes place.
Okay. Got another question here. Is it a total spend down? Total spend down.
You can receive the full benefits in cash, so there's not really a spend down. You're going to get that full benefit regardless, and it would be, I would say, accept that full benefit because if you leave any on the table, you do not get to access that at a different time. So basically what we say is just you're going to get that full monthly benefit regardless of kind of the situation you're in, if that makes sense.
Cool. Cool. Okay. Any other questions from anybody? I think we might have covered it all. So, okay. Well,
Mike, what I can do, and everybody on the line, Mike, I'll shoot you over some information specifically about that Care Matters product that we touched on a lot today. And if anybody is interested, if you wanted to pass that information along, feel free. But yeah, I can get that specific Care Matters stuff over to you if people are interested.
Great. Yeah, I did have that question on issue age, so I was going to actually get with you to get a producer guide and get that sent out to everybody.
Perfect.
So I appreciate that, Jordan.
Yep, absolutely.
So, okay, well, I guess we'll wrap it up then. That concludes the webcast, and I just want to thank everybody for joining today and for bearing with me during our technical difficulties. We switched webcast systems recently, and so we're still experiencing some hiccups here and there. So I do appreciate everybody's patience there. A full recording of this webcast will be on our YouTube channel. If you haven't subscribed yet, I would encourage you to go and subscribe to the channel. Just go on YouTube and search for National Brokerage, or go onto our website. There's a link for it there, as well as our other social media, such as Facebook and Instagram and LinkedIn. If you do have any other questions that you think of after the call, feel free to either give your marketing rep a call or just give us a call at our general number, 1-800-377-6344. And if you don't have a marketing rep yet, just let us know and we'll get you assigned to a marketing rep. And let's see, seems like I had one other question. I'm going to address this last question here. It popped up. If you have been declined, can you still apply for this product? I would say it depends, more than likely.
Sorry, what was the question, Mike?
If you have been declined, can you still apply for this product?
Gotcha. So yeah, it would depend. Situations I've seen where it is case by case. I'll just leave it at that. It would just depend on the case and the information. We do have an underwriting team who can screen potential cases before submitting applications. So that's where that sort of situation may come into play.
Yeah. Chances are it wouldn't be a walk in the park, but it wouldn't be impossible either, I guess.
Correct.
So, okay, fantastic. Well, thanks again, Jordan. I appreciate you jumping on the call with us and going over that. That was a big help. And just thanks everybody again for joining. If you haven't followed us yet on social media, please do. And we'll hope to talk to you soon.
Thanks, everybody. Thanks, Mike.
Thank you. All righty. Bye-bye.